credit cards. The charge cards, on the other hand, are travel and entertainment cards. They usually don't have a limit, but you have to pay the balance at the end of the month. The Green American Express card, if any of you have ever seen the commercial, and please mute your computers or phones. I hear birds chirping and everything else. But the Green American Express card, that is not a credit card. You cannot keep a monthly revolving balance on that card. You can put whatever you want on it, but at the end of the month, you have to pay the full thing. If you charge up $5,000 this month, you have to pay all $5,000 when the bill comes. Retail credit cards, those are some of the ones with the highest interest rates. So be careful when you go to apply for retail cards. And every time you go to a store, they try to get you to apply for a credit card while you're checking out. Would you like to save 10% today? How would you like to do this today? They always are going to push their retail cards on you. These are the ones issued by businesses, department stores, gas companies, and airlines, but they're limited to the goods and services of the card issuer. So I can't get a Macy's card and take it to Best Buy and purchase things. If I get a Macy's card, I'm limited to only buying things at Macy's. But again, be careful because those have some of the highest interest rates. I do want you all to write down this one, secured credit cards. I want you to Google secured credit cards. What a secured credit card is, it's an account held by a credit card issuer, and let's say I send them $300. They're going to send me a credit card with a limit of $300. Now, people are like, well, if I have the 300, why do I have to do that? Well, I travel quite a bit. And when I go to get my rental car, it doesn't matter how much cash I have. What do they want? They want the piece of plastic. They want the credit card. When you go to a hotel and you try to check in, they're going to ask for a credit card for incidentals every time you check in. So in 2021, you need some type of credit. And a secured credit card is a great place for you to establish credit or rebuild credit if you have messed up your credit. Now, I know it's happened to none of you, but I was the guy my freshman year of college at Arkansas State University. I applied for 50 credit cards my freshman year. Yep, I sure did. And this is very important. I need you all to write this down. Don't do that, okay? So my freshman year of college, I totally jacked up my credit. Nobody sat me down and talked to me about credit like we're doing for you all right now. Don't do that, okay? But by the time I graduated college, 6 months after graduation, I took the worst credit report you probably ever seen, and I turned it into a perfect credit report. One way that I did it is by using secured credit cards. Remember I told you they want those 3 open lines of credit paid on time? I was able to use some secured credit cards, and I'll show you what else I did. But that was a good place for me to start, and I was able to rebuild my credit just like that. The last one is affinity cards. Oh, and when you guys Google secure credit cards, there are some good ones, like Capital One has a good one, Citi has a good one, but be careful. There are some secured credit cards that charge 90% interest. I did not stutter. They charge 90% interest. Don't do it, okay? Affinity cards are cards issued jointly by a lending institution and another organization like a charity or a college alumni association. So if you all get a credit card from the university and it has Tuskegee all over the front of it, every time you make a purchase, a percentage goes back to the university or whatever company that you have their credit card. Those would be affinity cards. Now, when choosing a credit card, take a look at different options. Get one of the big ones, Visa, MasterCard. And again, remember I said you're working your way up to 3. Don't run out and grab 3 or 4 all at once because it's easy to spend, but hard to manage sometimes. Make sure that you compare the different terms and conditions. Competition among card issuers is strong. The banks are begging for business. So always make sure you shop around for the best rates. Look at fees. Always read the fine print at the bottom. Definitely take a picture of this screen. I won't have time to go into it, but thank you, President Obama. The Credit Card Act of 2009 started back in '09, but has gone into effect over the years. A little bit has happened over the years. And the reason I want you to pull it up is so that you can look at all the different credit card law changes since 2009. One of the big ones, if you hadn't noticed, you don't see credit card companies hanging around campus anymore. When I went to college, credit card companies were everywhere. Fill out this application, you get a free t-shirt, beach ball, or whatever it is. They stayed on campus and begged everybody to fill out these credit card applications. Under the new law, they can no longer hang around college campuses. Also, if you're under 21, you need a cosigner or proof of your ability to pay that debt before they will issue you a credit card. Yep. So there are some other things like they have to notify you 45 days before any type of rate or fee changes. So there are a bunch of different laws that have gone into effect, but I want you to take the time and Google that law, the Credit Card Act, and take a look at the different ones themselves. Now, here's one that happens to get people in trouble sometimes, using your Visa debit card, not a credit card. All right, if you have a bank account, you have a Visa debit or a MasterCard debit card with your bank account. We go to the store all the time and we use it. We swipe it, swipe it, swipe it. But when you go to Walmart and it asks you that really important question, credit or debit, how many of you use debit? I can't see the hands, but I'm sure it's quite a few of you. How many of you use credit? All right. Here's what I want you to do. Don't ever use it as a debit transaction again. Never, ever, not once, zero. All right. Don't ever use it as a debit transaction again. Only use it as a credit transaction. It's the same money coming out of the same bank account. It does not turn your debit card into a credit card. It simply alters the transaction. Okay. One of the big issues we're having, and I'll get to in a second, is identity theft. And one of the ways that these criminals are getting your information is your PIN number. Yep, those magic 4 numbers are not your friend. Only use your Visa debit at your bank and your bank's ATM. Other than that, avoid it as often as you can. Okay. If you're a victim of identity theft and you call up a credit card company and you say, hey, I haven't seen my credit card since Thursday at 8 o'clock. Anything after that's not mine. They say, great. They cut off the credit card. They issue you a new one, and you may get that in about 2 or 3 days. But if you call your bank up and say, hey, I haven't seen my debit card since Thursday at 8 o'clock, anything after that's not mine, they're going to say, okay, we have to investigate. Now, that investigation may take 2 weeks. It may take 90 days. So just imagine you going 90 days without being able to get a hold of your money. Yep, you're eating cream of wheat 3 times a day, and your bills aren't getting paid, so life is not good. So remember, don't enter your PIN number if you don't have to.
Mr. Creighton?
Yes.
I am going to mute everyone and ask you to unmute. And then the last thing is there's a statement in our chat that says something to the effect, does it have to be a Visa or any company? And then something about using cards at the gas pump. Is it the same?
Okay.
So bear with me.
All right. So, not sure what you mean by does it have to be any Visa? What was the question again?
The question was, does it have to be any Visa card? And I guess it was something to the effect of when you were asking or saying, don't use your Visa card, don't put your PIN number in, and it doesn't matter.
Yeah. So yeah, any bank's Visa debit or MasterCard debit. Remember, it's the card linked to your bank account. So yes, don't use your PIN number if you have a Visa debit or a MasterCard debit card with your bank. Okay. That's how these thieves are getting your PIN number. Now, go along with the same thing. Gas stations, great question. All day long, people take that card and stick it in the gas stations. But when you get to pay, do credit. Same thing, always use it as credit. Criminals have a thing called a skimming machine, a skimmer. They stick it over the gas station pump. You don't even know it's there, okay? Your card still goes in and out. They come back later. The thieves come back later and they take the skimmer off of the gas station pump, and gas stations are one of the highest places for identity theft. And they can take your credit card information and put it on a dummy credit card, but they can't get into your bank account unless you give them your PIN number, all right? I do these workshops all over the country. I was down at Xavier University in New Orleans. I drove when I got the call from DC. It was a big snowstorm, and she's like, "Can you do a workshop at Xavier?" I said, "Yeah, when?" She said, "Tomorrow." So I had to drive down to Xavier, and on my way back, I stopped in Memphis to get gas. I used my credit card. I teach this stuff, and by the time I got 20 minutes away from the gas station, I got a phone call from my credit card company asking, did I buy gas in Miami? So yeah, they got me just like that, all right? And no, I didn't use my PIN number, but remember, they can take that same credit card information and put it on a dummy credit card. So they were doing things like buying DoorDash and junk like that on my credit card, but my bank caught it. They cut the card off real quick, reimbursed me anything that they did, and I kept it moving. So even as simple as that. I know it's hard, but carry cash. Yep. And people are like, well, I could lose my cash. You could lose your plastic too, but it's not as hard. Nobody can steal your identity off a dollar bill. One of the biggies, there are a few biggies in credit. I need you guys to understand this one. Take a picture of the screen, write it down. Understand your debt to limit ratio. Whenever you all go to buy a car or go to apply for any type of loan, home loan, the bigger loans, you have to know your debt to limit ratio walking in. What your debt to limit ratio is, it's the outstanding debt in regards to your limit. This situation, I have a $1,000 credit card. That's my limit. The most I can put on it, $1,000. I charge $300 on it. My debt to limit ratio is 30%. If I charge $450, my debt to limit ratio is 45%. What if I charge $750? What's my debt to limit ratio? 75%. You guys got it. But here's the point. It doesn't matter if you pay your credit card bill on time every single month. If your debt to limit ratio is over 50%, your credit score still goes down. Yep. Is that fair? Nope. But you know what it is? It's a new rule to the game. They want you to keep your debt to limit ratio under 50%. So remember that if you go to buy your first car or another car, they will calculate what your debt to limit ratio is. They run your credit report and they can see all your credit cards and any payments that you have on your credit. So they can see what you owe and they'll calculate it. If your debt to limit ratio is over 50%, it will hurt you. All right. Come on. Let's talk about your credit score. This is how companies partially how companies grant you credit. When you all use things like Credit Karma and Credit Sesame, you get a free credit score, but that is a Vantage credit score. The problem with that is 99% of the companies don't use the Vantage score. They use a FICO score. FICO scores are right here. I'm going to keep it simple. Write down 700 and up. Keep your credit score at 700 and higher. If you do that, you can have confidence that if I go to a car dealership, I'm gonna drive off this lot with a new car, okay? If I apply for a home loan, chances are I'll probably get approved. But how do you calculate your credit score and how do you get it to 700? First thing that we talked about, 3 open lines of credit paid on time for 6 to 24 months. They want to see on-time payments for 6 to 24 months. And a debt to limit ratio under what? Yep, we already said it, 50%. So take a look at the screen. Your payment history, those on-time payments, make up 35% of your credit score. That debt to limit ratio I just covered makes up 30% of your credit score. Those 2 little things, paying on time and keeping your debt under 50%, make up 65% of your overall credit score. The credit history, meaning how long have you had credit, makes up 15%, okay? So the longer a person has established good credit, the better it looks on their credit report. When I applied for 50 credit cards, one of the issues with applying for 50 credit cards is every time you apply, it reduces your credit score. Those are called inquiries. Now, There are two types of inquiries. There are hard hits and soft hits. A soft hit is you checking your own credit. You can check your credit as many times as you want to. It does not hurt your credit. If you get a solicitation in the mail for one of these credit card companies saying, you're a pre-approved for whatever, 0% or whatever credit card, those are soft hits. They do not hurt your credit. The only time a credit inquiry is considered a hard hit is when you give someone authorization to pull your credit report. You either sign some piece of paper application, or if you apply online, you have to click on the box that says, I authorize blah, blah, blah. That's the only time they can pull your credit report. And that is a hard hit, and it stays on your credit report for 2 years. All right. So by me applying for 50 credit cards like a dummy, that destroyed my credit just on the inquiries. And the last one is types of credit in use. What they want to know there, is it secured or unsecured debt? Is a car loan a secured loan or unsecured loan? Think about that. If you don't pay it, what will they take? They take the car. So the loan is secured by the collateral of the vehicle. A home loan, it's secured because, well, they won't take the house, but they'll kick you out. Credit card, little piece of plastic, is that secured or unsecured? Unsecured. That piece of plastic isn't worth anything. All right. And some people have really good credit, and they can walk into a bank and say, I need $10,000. They sign their name and they walk out in the form of what we call a signature loan. Unsecured debt like that is looked at worse than secured debt because there is no collateral. All right. Risk factors are key. Generated when a risk score is calculated. What is a risk factor? That is the risk that you are to the lender. Tells a consumer what to address on their credit history to become more creditworthy, largely inconsistent from model to model, etc. Let's see. We talked about the credit scores. I need you to keep it above 700. If your credit score drops down to maybe 650 to 625, you still might get approved for the loan, but your interest rate goes way up. All right. So remember that 700 benchmark. Keep working, keep paying on time, keep your debt low until you get it over 700. Now, being in college, these are some serious decisions you have to ask yourself, because these are the years where we think, well, in college, you're there for a reason. Graduate. All right. That's it. But in college, we want to do things that we don't really have the money for, but we want to get the new J's or do whatever we want to do. But really ask yourself, do I really need it? Am I buying it because a friend bought it? Am I buying it to impress somebody? Can I really afford it? Am I good with finances? Remember what I talked about at the beginning? Everything that we're discussing has to do with your habits. All right. People crack me up because they're like, I just need cash flow. No, we all have cash flow. It flows in and it flows out. What you need is cash stick. When it flows in, I need it to stay. How we do that is by changing our habits from spending everything we get to start saving and investing what it is that we get. Because always remember, guys, there's something called long term. If you save it now, later on, when you all graduate, because you didn't buy the extra pair of Air Force Ones or whatever, you might have enough money saved up to buy your first home. But you got to start saving and investing now in order to do that later. So remember the questions to ask yourself. Do I really need it? Do I pay my balances each month, etc.? And know the danger signs of financial trouble. Do you miss any payments? Have you reached your credit limits? Do you work extra jobs just to cover your bills? Do you depend on your parents to cover your bills for you? And do you borrow from friends and relatives to cover basic expenses? Do you find it impossible to save money? Do you use credit card cash advances? Oh my goodness. Don't ever use your credit card cash advances. All right. So again, you have a credit card limit of $1,000. A lot of credit card companies will allow you to go to the ATM and pull out either half or all of that $1,000 in the form of a cash advance. Yes, they will. The problem with that is they charge you a much higher interest rate for using it as a cash advance card instead of an actual purchase. So again, always remember when you use this stuff, think about the decisions. Was there another question? Can't hear you.
There are 3 questions.
Okay.
You want me to ask them as they come? Because I was just sort of waiting.
Yep, throw them at me.
Okay, so the first question that was asked was, is it true that your credit score decreases when you pay off a credit card and close the account?
Yes. Not so much when you pay it off, but when you close the account. The answer is yes. So why? Again, what you all need to understand about credit, nothing makes sense, nothing at all. But it is a rule to the game. They do not want you to close that account. If you close it, your credit score will drop. But if you have other credit cards and you, again, pay on time, keep the balances low, whatever it dropped by, you can build it back up. It's just, do you want that drop in the beginning? So if you're disciplined enough, sometimes people pay it off and just cut it up and throw it away. That way they don't ever touch it. All right. But yeah, it can hurt your credit. What else?
What's a good credit score for someone with their first credit card?
Again, you want to keep it 700 and higher. Now, if you have not built credit, your credit score is not going to be 700. All right. You have to build it up to that. So I don't even, and here's the thing. You and me can have the exact same credit cards, pay the exact same time, but our credit scores will not be the same. All right. When you pull, there are the big 3, Equifax, Experian, and TransUnion. Those are the big 3 credit card companies. Your credit score won't even be the same between those 3 companies. It's going to be different with every company. So I don't even know what your credit would be if you've never had credit before. But when you pull your credit report and when you apply for your first credit card, remember, as long as you do those basic things, it will go up gradually, but it will go up. So again, they're not going to say this is a good credit report for a new person. They're just going to look at the credit report and score, period. So again, 700 and higher. What else?
What's the easiest way to build credit for the big first purchase?
3 open lines of credit, paid on time, 24 months with the debt to limit ratio under 50%. That's it. If you do those things, and again, guys, remember, they're going to look at the credit score. They're going to pull your credit report to see how many open lines you have, how much debt you have, and if you're someone who pays on time. That's just part of your application process. You can't just go to a car lot and say, I got great credit, I need to get that car. The next question they're going to ask is, great, let me see your last 2 paycheck stubs. Do you have any income? You need a job, you need income. And if you own your own business, they're going to want the last 2 years of tax returns. Okay. I know that because I own a car dealership. When I bought my house, they didn't want to count the income I had from the car dealership because I didn't file 2 years worth of tax returns. So those are the things that they're going to want. But how do you get those big purchases? That's how you do it. What else?
What's your opinion on investing in stocks?
Great. We're not covering that. Only for upperclassmen. Is that an upperclassman that asked that question? Go back in the chat, whoever asked that question, if you're upperclassman, yeah. But we're doing the workshop, tell them, on the 10th, and we're going to cover investing. We cover credit and budgeting.
It says no, I'm a freshman.
Okay, freshman, we cover credit and budgeting. That's the first place. Until you get the foundation, we're not going to cover investing, because the answer is yes, I believe in investing. I know all about that. We're going to cover a lot about investing. What I do want you guys to be careful of is the Robin Hoods of the world, is the Bitcoin, Dogecoin, GameStops. Don't go chasing waterfalls. Like TLC said, those are waterfalls. Everybody that I know in your age group who has chased those things has not done well. Okay. We need to talk about the foundation before you start chasing the risky stuff. All right. Let's get back to credit real quick. How to damage it. Pay late, miss payments. Okay. And when you all miss payments, that stays on your credit report for 7 years.
Yes.
Right? Up to 7 years. Now, I'll cover some things on how to get rid of it. All right. Next one. Late payment on cell phone bills. When you guys pay your bill on time, does that show up on your credit report? Nope. But what if you miss your payment? Does that show up on your credit report? Yep. It goes to collections. All right. Remember, it's a rule to the game, not fair. I pay on time, it doesn't show up. But when I'm late, it shows up. All right. Any account transferred to collection agency does show up on your credit report. Negative information, period, stays on your credit report for up to 7 years. And for anyone who tries to file for bankruptcy, that can stay on your credit for up to 10 years. And as sad as it is, you guys, I've had college students come up to me after these workshops that have had to file for bankruptcy at 18 years old. Unbelievable. Don't do that. All right. Avoid getting in credit card debt and trouble as often as you can. We talked about it stages like, oh yeah, the last one, financial stress. You guys have to get your good grades, pass your exams, find some internships and summer jobs, declare majors, graduate. You don't need financial stress added to all the other stuff you have on your table right now. We talked about how to request your credit report. Those are the big three right there in the middle: Equifax, Experian, and TransUnion. They do not give you your FICO score for free. You will have to pay for your FICO score. Some of you may have accounts with things like Experian, Boost, and some of the other services that these credit card companies offer you. Those services are not free. You may have to pay a monthly service of $8 a month or whatever for Experian to manage your accounts. But when you do that, they will give you your FICO score for free. But it's not free because you're paying a monthly service. So remember that if you want your credit report, your credit score, you'll have to pay for it. Look at your credit report and find out if there's any information that's wrong. If there's information that's wrong, you can dispute that information. Any information that stays on your credit longer than 6-7 years, they got to take it off immediately. Any bankruptcy information more than 10 years, it has to come off your credit report. How do you do that? All right, here's how I fix my credit. First thing that you do is make sure the information is accurate. There were some things that weren't accurate. I disputed it. You can dispute 3 ways, guys. Pick up the phone, call the 800 number, write them a letter, or go to their website and dispute online. It gives you a spot that says dispute. You say this account isn't mine, or this account is not accurate. It shows that I have a balance, but I paid it a long time ago, and they have to update it. They have to update it in 30 days. Everything on your credit takes place in 30 days. Your billing cycle, 30 days. When you dispute an item, 30 days. Remember, everything on your credit, 30 days. You contact your lenders. So the information that came back on my credit report that was negative, I picked up the phone and I called the lenders. I made them an offer in compromise. I said, look, I owe you $1,000, okay? So if this is you, here's how it works. You have a $1,000 credit card, you charge it up to the max and you never make a payment. Eventually, they're gonna, after they're done sending you all the letters and threatening and all that, they're gonna write that debt off as a bad debt. But you can call that lender because at that point in time, they're not expecting you to pay any money. But you can call them up and say, hey, how you doing? I owe you $1,000, but you've been messing up my credit for the last 3 years. So I'm gonna call us even today. How about that? I'm gonna send you, I wanna settle that $1,000 debt in full for $300. I'll pay you 30 cents on the dollar in order for you to change that to paid in full. Anybody think they'll take it? Don't know. They may come back and say, we can't do $300, but we can do 4. Regardless of whether it was 3 or 4, you just saved yourself $600 to $700 in paying that debt off. It will reduce your credit score some, and it shows up on your credit report as settled for a lesser amount. But remember what I said, you got that debt off of your credit report. Then you get a secured credit card or something else, and you start paying on time so that those payment histories start going back up pretty fast. And I ended up getting 3 secured credit cards all at once, and I paid on time every single month, and it boosted my credit in just a short period of time. But you contact the lenders, you make new arrangements that they agree to. Before you send them a penny, make sure they send that to you in writing, all right? Whether it's through email, through mail, say, okay, I will agree, because they may say, oh, we'll agree to 300, but you can pay us 100 over the next 3 months. Perfect. Once you send me that in writing, I'll send you the first payment. All right. That's how you do it. There are companies out here, guys, that charge you $2,500 to do what I just told you. Don't pay them. Pick up the phone, contact your lenders, and just negotiate yourself. You can do it yourself. Ways to maintain and improve credit: limit your spending to needs, not wants. Remember, credit cards are loans. Pay those balances. Keep your debt to limit ratio under 50%, 30 is better. Keep a record of your transactions and decline any credit limit increases. Always pay on time. If you can, sometimes it's better to pay more than that minimum. If you have a credit card and your monthly minimum payment is $10, you may pay them 15. Just pay them a little bit more. Oh, this is great. I'm going to go. So real quick, I just want you all to think about it. What are some good things to put on a credit card? All right. People say, well, emergencies. All right. Well, emergencies are different to different people. Some people, an emergency is my car breaks down. Some people, emergency is I need a new outfit for the club on Friday. So you have to think, what is a real emergency? I hear people say gas, food, going out. Okay. How long does it take for your car to burn gas? Pretty fast, right? How long does it take for your body to get rid of food? Don't answer that. Just think about it. So why would I pay interest for months and years on something my body got rid of in 24 hours and my car burned in a week? Those are not good things to put on a credit card. Anything of limited use, food, gas, hanging out, party, those do not put on a credit card. But what about books? You need those to graduate, pass your class, okay? A real emergency. As I said, my car broke down. I have a relative who's ill. I need to get a plane ticket to get home. That's an emergency. Educational expenses, maybe a new computer. You can, if you put a credit card or a computer on your credit card, that computer can last you all 4 years of college. That's a good purchase, all right? Or somebody may have a job interview coming up and you may need a new suit for an interview or something like that. Okay, that's not a bad item to put on a credit card, but not food and junk, all right? Ways to curb your card usage: limit the number of cards that you own, lock them up, create a budget for yourself, put a reward system in your plan.